For the last 2 years, I've been studying and analyzing multifamily and commercial real estate deals, both by joining local real estate investment groups like CREA and closely monitoring new sales in the MLS with my real estate license. I've partnered with the team at Hamel Real Estate to take things to the next level this year, sit next to high-level operators analyzing local real estate deals, and help them learn the same strategies that I'm applying. One property that came up on our radar was a small 5-unit in Rensselaer. I thought it was a good property personally because it was a small 5-unit, short drive to downtown Albany and right across the street from the train station, making it a perfect property for commuters up from the city. However, the property is still sitting on the market and people are wondering why. Numbers. Everything is always numbers. Ben Mala on YouTube always says if it doesn't make dollars, it doesn't make sense. And for any scenario, when you're buying real estate, there should be 3 exit strategies to consider: as is, market, and fully rented. As is taking the property as it sits with all tenancies and problems in place. Market is you adjust the low rate rents to market rents with minimal renovations. And fully renovated is taking the property, updating it completely, bringing the best rent price for the area. We took a look at the rent roll and walked the property and came up with those scenarios for this property. Now, the property currently brings in $41,760 in gross rental income. 27% of that will typically be lost to things like capital expenditures, management, and vacancies. Taxes and insurance are subtracted from that to get a rough net operating income, or NOI, of $22,300. If you bought the place at $400,000, that would give you about a 5.57% cap rate. Essentially, it's just a number used to calculate a return on your investment. Smart investors look for around an 8% or more on their investment, especially with real estate, as there are safer ways to park your money with lower risks like bonds and banknotes. For someone to buy this place as is and make a 7% cap rate, they would need to purchase the property at $318,000. This would cause a loss for the current owners. However, the building was purchased not that long ago for $325,000. The next strategy we would look at is to bring the rent up to market rate. The rooms and the tenants are in rough shape, smoked in for many years. However, there's still room in the rent growth. Some would argue that being able to smoke in an apartment is akin to allowing a pet in, some cases much worse, and should come at a premium. It wouldn't be unheard of to ask $900 instead of $600 when these apartments next to this building are renting $11, $12, even $13, $1,400 in average condition. Simply increasing the rents to a below average rent roll would bring the NOI to $31,200. And using the same math as before, if someone were looking to make an 8% return on their investment, they'd offer in the range of $390,000, much closer to what they're asking currently. This move will make it profitable for the current investors and still leaves room in the budget for the next operator to do some renovations and bring the building to market rate, which brings up the third option: doing a full renovation on this place and charging a premium rent for a premium unit. Figuring about $25,000 a unit, $125,000 total. Doing so would bring the NOI to about $53,000, and in the commercial world at an 8% cap, that's a $664,000 asset. Now, each scenario with each property is going to be unique, but for this particular property, spending a little bit of time to update the rent roll to make it more attractive to buyer clients would probably be the best option in this particular case. But it's up to the investors, the buyers, the sellers to make that decision ultimately. I really appreciate you listening thus far. If you've stuck around, if you or someone you know is interested in increasing value in your commercial multifamily property or selling your multifamily property, please reach out to us, the team at Hamel Real Estate, or just shoot me a message. I'll reach out to you and we'll help you out.